You're welcome. Today we'll be taking on the next approach used in measuring national income accounting, and that will be the income approach. Previously, we've been talking about the expenditure method or approach used, and we've seen the different strategies that are employed when calculating national income using the expenditure method. We equally saw some questions, different categories of questions that are usually feature as concerns that expenditure method. So today we'll be talking more on the income method. So press up. Now, according to the income method, national income is defined as the sum of all gross factor incomes that are realized in an economy during a given time period, usually 1 year. It refers to all gross factor incomes that are realized in an economy during a given time period, usually 1 year. Now, from that definition, there is a very important or crucial element that I want you all to be more focused on, the element of factor incomes. Factor incomes, that is incomes that are backed by goods and services rendered, or incomes that has a corresponding value of output, that is either of goods or services backed by. Now, this therefore means that we do not consider any type of income that is realized in an economy as concerns the income method. So we only consider those incomes for which a service was rendered or a good was produced. So they are all called factor incomes. So I give it again. It considers the sum of all gross factor incomes that are realized in an economy during a given time period. Now, some of the examples of these incomes or these factor incomes includes rents, that is money paid by tenants to a landlord. Remember, there are two types of rent. There's a commercial rent and there is economic rent. So rent, dividend, that's money received by shareholders for taking risk to invest. There's interest. There is income from employment, income from self-employment. There's rates and so forth. Now, there are some incomes which are never considered under this income approach. Incomes like income from unemployment or unemployment benefits, that is things that are given to you but for which you have not done anything to earn it, that is income received but not earned. So we do not consider such incomes under the income approach. We have sickness allowances, they are not considered. We have housing allowances, they are not considered, and to an extent scholarships, they are not considered. So those are not factor incomes. So we take note that whenever we're giving statistics under this income approach, these statistics are always mixed up with relevant and irrelevant materials. So you should be able to distinguish between those that are relevant and those that are irrelevant. Those things are examination tricks to test whether you understand the concept of national income under this income approach. So you take keen note of that.